There's an attorney in the BNI group that I'm in, and he talks all the time about avoidance and preparedness and stopping things before they happen, like getting in front
Yeah.
of problems. And the problem is, like, from a marketing perspective, I think that's just worth less.
Yeah,
Like, I think people will pay more to be pulled out of a burning building than to,
that's
like,
true.
not have their house catch on fire.
That is very true. Okay, so let everyone fail. Go and, that's probably a fair
Yeah.
point.
So there we go. That's the episode. So don't go into tax preparation, tax planning, go into tax resolution, only help people that have huge tax bills and charge them an arm and a leg.
Yeah, you just described, like, the point of litigators right there.
There you go. Yeah, that's true.
Y'all think too small, I got big dreams. You just starting, I'm way ahead at the end scenes. Started reading and dodging all of the quick schemes. Money like your Spotify, boy, I got 10 streams. Be real big, I gotta make it just for my kids and for their kids, just kids. That's what.
This is Dealmakers Podcast, episode 15, where we talk about the state of the market for accounting practice sales and some things you can do to make yourself more competitive, including becoming an EA with Daniel Talbott, an EA. Hi, Daniel.
Hi, Sarah. There's so many buyers right now, and a lot of them are CPAs. A lot of them have done acquisitions in the past. Like they've got acquisitions under the belt. They've got a ton of cash sitting around. And I feel like this wasn't the case like 6 months ago, a year ago.
Oh, it definitely was 6 months ago. Yeah.
It's crazy how fast things have changed and how much harder it is now to even like get into the negotiation, even get an assigned LOI to start a deal.
I was talking about this with somebody yesterday, which was they said, "Is this normal? Are you seeing more than a 1.5x multiple of gross revenues make it to closing?" And I said, "I mean, I'm seeing those offers, but I haven't seen
Mhm.
any go all the way through to closing. I have seen people start out because 1.5x is high. A lot of companies of all sorts sell according to multiples of different things, and for whatever reason, in accounting practices, and the multiple of gross revenue is what people tend to focus on. And the general rule of thumb is they sell between like zero point 0.9 and 1.3x of the top line revenue of the firm. And because accountants really follow rules, partially, that self perpetuates a lot. So when we're talking about the multiple, 1.5x is high for historical purposes.
Mhm.
Um, but you're seeing even higher deals and higher listing prices out there than ever before, because I think we're seeing, or maybe there've been a lot of like accounting practice today type articles about private equity entering the scene. And so everyone's
Yeah.
thinking, let's go high, let's see what happens. There's a lot of news about this. I've been a part of or I've, every conference has some kind of breakout session about like private equity trying to buy you out. Everybody's really interested in it. I get that question 5 to 10 times a week. What are you seeing with private equity in the scene? So people are, kind of in anticipation of that or in response
Mhm.
of thinking that that's around, they're listing higher. Um, I haven't seen any go to closing with those higher multiples, but it's because of the time of the season, right? Like we're currently in July. In May, everyone's still staring at a wall from tax season. In June, people are listing, and in July, they've gone through a couple letters of intent, and people are, the music's stopping on the musical chairs a little bit, and then we're gonna hopefully close some more in July, August, and September. And so I don't know that I would have seen them go through in closing. But these people I was talking to said, is this standard? Is this a normal thing? We talked to blah, blah, blah and blah broker, and they said they don't normally see this and that it won't ever go this way. But what I said is, I think even if you have 30 years of experience in this space, you can't necessarily say that it's going to keep going. I think we're probably in the middle of a complete shift, but when you're in the middle of it, you you can't you can't really take stock of being in the middle of a big change. You're just in it. So I think I'll have more clarity next year in reflection as to this year. But I'm definitely seeing higher list prices. And those firms that are like 2.5 to $4 million are so sought after by private equity. One of the big players in the space reportedly got like $85 million of funding. And everyone kind of thought that they would tick over to the 10 million plus mark at that point, but they still seem to be putting offers in on the $5 million and below firms. And when you've got an earmarked $85 million to spend on firms, like how can a regular person compete with that? So I'm really interested to see how, regular CPAs who are doing the traditional, buy a firm with 90% SBA 7A loan and 10% seller note, how they're going to be able to ever compete with, huge private equity that can ratchet their purchase price up by $500,000 and it's a rounding error.
I have more experience in this from the real estate side, less so because I'm new to the M&A world, but I feel like banks are slower to adapt. So while you need to be able to offer 1.5 times gross revenue to be competitive in the market right now, are banks still kind of stuck at that like 1.25 max?
Well, it has to cash flow, right? Like they don't care. They're agnostic as to the multiple. They want to see enough. Um, the way that the banks look at it is, okay, well, if you're going to service the debt, will you have enough money to run the company and live off of it? And they want to see that, and they can crunch that pretty small. So some deals that are still able to survive at the higher multiples are ones that are expansion loans. So if you have an existing practice with the same NAICS code as the company that you're trying to acquire, you can expand into it. The reason that that makes the debt service coverage ratio different, there's a couple of reasons, I'm sure, but they don't have to build an owner comp to that cash flow of the acquisition target because you're already, you've got a current firm that you're living off of. And so you don't have to put any money down either. So I'm seeing some of those be pretty competitive offers, expansion loans funded, and that's one way to participate. But I the interest rates are too high, and that's with interest rates at like prime, prime plus 2.5 for 7 to 8 loans. It's not the bank's fault. That's just the environment we're in, but it makes your overall purchase price have to be lower so that you have more, margin.
It seems like businesses don't have the same cycles, or at least the same timeline to a cycle as real estate also. So like while the market and there's like a lot of economic spending aversion right now,
Yeah.
we are seeing businesses become worth more and more buyers getting into the space. So, very much with a seller's market where sellers are getting much more than they would have, somewhat recently because there are so many buyers. I talked about this just the other day. Uh, so before I got into all of this, I'm a part of the Business Brokers of Florida. Um, about 4 years ago, there were 4,000 businesses listed in the state of Florida,
Okay.
and there were 900 registered buyers on the platform.
Wow.
Right now, as it is right now, there are 2,000 businesses listed for sale across industries, 9,000 buyers listed.
Wow. How do they collect the listed buyers?
When a broker meets a buyer and they inquire about a listing, they'll put them into the MLS so that they get like a drip campaign, like a drip
Okay.
email about others. Okay, so active numbers as of right now, what's today? July 3rd. 2,250 businesses listed for sale in the state of Florida by affiliated brokers, and a list of 9,876 buyers.
Jeez.
Yeah, so half the business listings, 10 times the buyers in the market, just from this metric.
Yeah. So I am seeing that a ton of my clients. I mean, a ton of my clients have not had their LOIs accepted more than 3 times at this point. So, that's something. Oh, yeah. And it's making me think totally different things. First of all, one of the things to keep in mind is I do accounting practice buyouts, right? So it's deeply seasonal and we're in
Mhm.
the season. It's July. And in the fall, we're looking at totally different situations. So when you said 6 months ago you weren't seeing this, yes, absolutely. 6 months ago was tax
It was
season.
in tax season.
So it's kind of harder
Yeah.
to establish trends.
Well, I guess I should say last fall. Last fall is what I really should be saying.
Yeah. Yeah. Well, or last summer. I mean,
I wasn't in it last summer. Like I told you, a minute. I've been doing
maybe.
this a minute. Why I don't I that's why we have this podcast because you're the expert. I know nothing. I I could have paid your billable rate, or, yeah, I could get you onto a podcast and learn from you
Or
from
like in a reverso, I pay you. Solid. I'm very impressed. Yeah. No, it's
um,
true. It's and like there's so many other people who would look at me and say, "Well, you weren't in it, 6 years ago, either." So, but it is changing rapidly. I mean, I just sent you a link for a listing that I like, um, and it's I sent it to, 3 or 4 kinda PE shops because it's above the 2 million mark and very
mhm,
attractive. And there's just not that many listings like that. So, if you're looking for above 2 million with people who are
yeah.
a little bit tech savvy, remote, willing to maybe hang on and help with transition, then you're in the top like 5% of listings and you can just do whatever you want.
So before we started recording, I said it was priced high, but it's 1.375 times gross sales. So, I mean, yeah, it's more than 1.25, but it's still less than 1.5, and I think maybe that's where we're going. I mean, how do you even say? Like, I guess maybe tax season will cool it down again in the spring, but, like, what if I guess I don't know, I'm not gonna, like, try to make any market predictions, but, like, what if accounting firms get closer and closer to how, financial advisor or wealth management firms are valued?
It's super possible, and I think it's likely. So then the banks will have to come up with some way to make that work with them to be able to stay in the game. Um, Otherwise, banks are going to see way less deal flow and everything will be going to investor backed, search funds or PE funds that just have the cash and don't have to play by the 7A rules. Except for the like sub $1 million firms. And then you'll just have a lot of folks, kind of going for these really hard to buy. And the reason, like, I'm developing or I have developed a little bit of a, like, I see a trend where $500,000 and below for gross revenue and accounting practices. That's one person doing work, and you can buy that. You can assimilate into your existing things and maybe hire a person and tack it on if you're just a similar small firm, or if you're a bigger firm you can buy a $500,000 book and probably dovetail that into your stuff. Above 500 to like the 1.2 million mark is the hardest firm to run. You're doing somehow this the owner is doing almost everything themselves still, and with the tightest margin because they haven't had enough money to justify building out like they need to take the work off their plate. And so I talk to people who are at that range, that band, running businesses all the time, and I'm left after our calls with this like impression that they're just being waterboarded by work.
That's why the $2 million price point is so attractive to people because I've seen it, I mean, up to 1.5
Mhm.
usually is like a solo CPA who maybe has a senior accountant under them, but there's no one managing. Like, they're
Yeah.
managing the firm themselves.
And I've talked to people who are at the 2 million mark who will reflect on it and say, gosh, as soon as I got over that hump, my life got so much easier. Like I was just all of a sudden it's like when you're skiing and you're being pulled behind a boat and you're like just being waterboarded and then you pop up and it's just so much easier. So
We talked about that, with the investor I'm working with, switching up the strategy. I'm a minority, uh, role in this, but, rather than trying to compete with these big firms, like, actually coming in and just committing to buying 3 $1 million firms, roughly $1 million firms in a 12 to 18-month period, and, taking the one with the best tech stack and rolling everything else into that, and, like, just kinda taking the best of, the 3 and cramming them together and turning it into a bigger firm.
I think that's a really, really attractive play right now, but it's
Yeah.
so much work. And there's this kind of
So
deep
much
irony.
work.
It's so much work, and
So
it's so risky because
yeah,
if it doesn't work, it doesn't work.
which I
Only
think is a segue for us. So, finish your thought. I want you to finish your thought, but, like, I wanna get to, like, talking about that, like, the EA, like, non-accountants getting credentialed because I think that's gonna be an important part of that. But
I
what were you gonna say?
No, there's just this irony because the people who are best situated are the buyers who are best situated to do that strategy where they take on the smaller, bolt-on type of practices and, force them through systems and, then right pop over that mark is private equity. Like those are the ones who have it. It's the MBAs. It's that are running the thing with a ton of money, and they can have a year or two that are in the red, and that's totally fine and acceptable because they're going to get pop over the 10 and 20 million, and then suddenly they're going to be in the top 100 of the largest accounting firms. Like they're well situated for that, so it's kind of unfortunate that they're not going to mess with it. They're going to go with the just pay more money for the 2.5+ million dollar firms.
Do you think that in like 5 years we'll see this like scratch and dent sale from all of the private equity funds that failed?
I don't think that they will fail. That I mean, that's why this is an attractive play in the accounting practices are an attractive play in the context of our current kind of economic situation as people in this country is because they're so unrisky. They're so de-risked compared to anything else. I mean, the biggest risk to accounting is AI. So the biggest risk is that like it will get more streamlined, which is like, not so risky. Everyone has to, um, you know, file taxes, and everyone needs bookkeeping, and that's not going away. And it's recession proof, and it's professional services. So, one person with a laptop can usually do it. The overhead's so low. Um, you don't have hardly any fixed assets. So, if it fails, it would be not meeting really aggressive, like, hopes and dreams standards maybe, but it's not gonna, like, bankrupt anyone.
And any attrition that you have in a client base from one private equity held firm are likely to go to another private equity held firm. So it'll just be like this ecosystem of
Yeah.
but there's still plenty of non-accountants trying to buy firms. So what do they do? Like how do we help them at this point to make themselves look attractive?
So when I talk to buyers who don't have any accounting background, I will explain to them that a lot of sellers won't even consider an offer from somebody who can't do the work themselves.
Yeah.
And what they mean by that is you have to be an EA or a CPA. And what as I explain it, a lot of sellers will just come to market and tell their brokers, don't show me anything from these people. And unfortunately, a lot of brokers are not savvy enough or forward thinking enough to re-educate the sellers on that. They're just like, all right, I won't show any. I mean, there's plenty of buyers, so I'll just filter by the ones that,
Yeah.
don't have that, so I don't piss off my sellers and make them think I'm not listening to them. And so you'll another thing that I always warn people about is you brokers don't have any ethical obligations to pass along offers. Lawyers, that's a pretty deep-seated, I think, universal obligation that if you receive any offer of settlement or anything like that, we have an ethical obligation to inform our client, even if it's absolutely absurd. Because brokers don't have that, they can just ignore your letters of intent.
It's muddy in Florida because you have to have a real estate license to sell businesses in Florida. Businesses aren't governed under RESPA, the Real Estate Settlement Procedures Act. So we can do certain things like so it's not a violation of RESPA to give like a referral fee or to do certain activities like that, but the real estate commission, and this is going to be the case in any state that has a real estate license requirement for selling businesses, a lot of times they will adopt rules from RESPA into their own bylaws. So like you could lose a license, but I mean, there's so many brokers operating without a license anyway.
When I talk to people who say, and you didn't know this distinction either at the beginning, if you remember, but like, what's the difference between an investment banker and a broker, right?
Yeah, I had no idea what an investment banker actually did. I mean, I knew that they invested. I just assumed they invested people's money. I didn't realize that investment
I
bankers.
mean, that totally makes sense. That totally
Yeah.
is reasonable. And I said it's just a churched up broker, which is absolutely the case. I stand by that 1,000%. But, why is there this distinction? And it's because I think you're seeing and feeling more and more that there's this kind of, um, bias that, brokers are not all, like, very savvy, but investment bankers, they came right off of Wall Street. Yeah.
Well, I got leveled up actually because the investment banker that you upset at at the bar that you
Yeah.
met, and when he went on his rant, he said that a business broker could have worked at Foot Locker yesterday, but an M&A advisor was probably an accountant before. So
Oh.
I got a promotion. I I changed my LinkedIn from business broker to M&A advisor that day.
So Daniel is referring to me being apparently having exactly one speed and no ability to alter what I'm talking about to the audience, and just me as was like, I'm an M&A advisor, and I was like, okay, so broker, and then on like we were like, really not feeling that. But I just think it's funny, right? Like, are you an attorney? Are you a lawyer? Like, who cares? Are you a doctor? Are you a physician? Like, you're doing the same stuff. Let's not get caught up in semantics. But because truly, I think, but if you're coming from the mid market or the higher markets down, you do tend to call yourself an investment banker. And investment banker fees are usually like 1%, 3% or something. So you could argue that they should call themselves brokers because those fees are a lot better.
I took this route. So I didn't go to college. I got my first job in accounting before I finished my any degree in accounting. I got my associates while I was working my first accounting related job, working as a paralegal for a tax attorney. I got my EA very shortly after getting my associates in accounting. And then I ended up getting a tax advisory role at a venture-backed virtual firm before
Yeah,
I finished my bachelor's degree. So I stopped my bachelor's program. I did not finish the bachelor's program. So I have no bachelor's degree in accounting, but I've led teams of CPAs. I've
yeah,
interviewed and hired countless people out of Big Four, um, advised thousands of clients, and all off of getting the EA.
yeah.
Like the classes helped a little bit. Like the undergrad, like the associate level, like accounting
Is that
101.
required? Is there any like, do you have to take the classes to be eligible for the EA exam or anything?
No, you don't. You don't have to have any there's no college, there's no education requirement for the EA. You have to pass 3 tests and the tests are hard. There's 3 parts. There's individual, there's business, and then there's representation. Representation's the smallest and arguably the easiest, maybe because I was doing it at the time when I took it. Um, I did more business than individual, so business took me 2 tries to pass it, and individual took me 3 tries. So all in all, it took me 6 months to do it. And I was like in it. Like I'm like in school for accounting. I'm working in a firm, and it took me 6 months to pass the test. So it's not easy. And I don't want anybody to get the idea that you can just go and like get this EA real quick, and like that solves all your problems.
Your real estate license, how does it compare to those tests?
I actually got my real estate license twice. The first time I got it, I like diligently like took the classes and like I studied for it because like I was using that to get out of bail bonds.
Okay.
So I put a lot into it and I passed the first time.
Yeah.
Then I let it lapse because I just stayed in the business for like 3 or 4 more years. So then I had to go and get my license again, and the
Oh,
second time, I was like, "It'll all come back to me," and I failed, but then I passed on the second time without studying.
oh,
Um, so, like, yeah, there was a journey there,
yeah.
but my god, was it easier. It was so much easier.
Well, and
The
I'm just you're saying that, and I'm like, have I kept current on everything I need to? Like,
better
I
check. Yeah, you
wanna
better
take it
check.
again. Like, it was easy, but I still don't wanna take it again.
The EA was intense because it's hard and there's so much of the tax code that it doesn't even cover. It's going to feel like drinking from a fire hose, and there's so much that it doesn't even talk about.
Yeah.
Like you have to learn so little of the actual tax code to actually get your EA, but it's going to feel like so much.
Yeah.
So it's really difficult in that sense. They close the test for 3 months out of the year every year to update it with new tax laws because the tax laws change every single year. So if you study this year and then you don't
Later.
make the cutoff, they close it, they change the test, they reopen it, and then you don't like there could be things that you don't know, like
Okay.
so you have to restudy. So
Yeah.
that's hard. And then if you fail a test, you have to wait 1 month to reschedule. So It's just not built. It's not built to be easy.
Yeah, I
But
think
you don't. But time wise, it's like it's significantly faster than going and becoming a CPA.
I would imagine a great deal cheaper if you're looking to kind of leverage it into
Yeah,
buying an accounting practice versus the alternative. You can pierce through and be somebody who knows what they're talking about. That's going to get in front of
yeah.
sellers.
At least
Or
speak the
you can just
language.
like get $1 million more, and then they'll probably talk to you too.
Knowing what I know now, if I did it all over again, I wouldn't have done any college.
Yeah,
There is a course on Coursera. It's sponsored by Intuit. It's the bookkeeping, whatever, certified bookkeeper course on Coursera. Coursera is $50 a month. You can finish it in a month. It's set up to be done over 6 months, but you can do it really fast. But like, let's say you're going to go super, super slow. You're going to take really good notes. You're going to rewatch every video 10 times, really get the concepts. If you are a non-accountant, you want to buy an accounting firm and you want to do it for real, like not like, oh, I decided yesterday I want to buy an accounting firm tomorrow. Like, no, if you're really serious about this, I would get on Coursera first, do the bookkeeping course. So you'll learn about debits and credits and contra accounts, and like you'll learn the language of accounting. And toward the end of that, start studying for the EA and get your EA. Do those If you do those two things, like you're not going to have the real world experience of serving clients, but you'll at least like know what you're talking about.
I think that's such a good differentiator. And I think people, I about 25% of the time represent sellers right now. It skews a little bit higher. I have a lot of sellers, and I know that they would view that really favorably, especially
Yeah.
because we talked at the beginning about like private equity coming into the scene and all of the news. What I see more, and certainly last year, where I have a full year to reflect on it versus the years prior, and I saw way more activity for entrepreneur through acquisition search funders, which
Hmm.
can mean just a regular person who wants to buy a business of any type, or a person who's raised investor capital. So they can be self-funded searchers, or they can be, people who have like
Yeah.
investors who've given them money to facilitate this search where they're going to buy a business. They usually start out industry agnostic. That's their term, not so much mine, but I was industry agnostic. And now I'm really thinking accounting practices is a thing that I hear a lot when I'm meeting with people.
Yeah.
Cool. But you have to explain to somebody who's devoted their entire life to accounting that last month your LOI on coin laundry fell through, and before that you were thinking about HVAC or golf cart dealership.
Oh,
Like
there you go. Yeah.
that was a real one. Like, and
Yeah.
now you're going straight into accounting. Like, are you sure?
So I want to do a callback to the episode we had with Todd, from Thrive Group, a business broker for accounting practices. And he said he said be honest, and I don't think he's wrong. But I think that your honest has to be like compelling. So when we say like go get a certification in bookkeeping and an EA credential to be like an accounting professional, like, don't go in there saying, "I'm an accounting professional, I'm an EA, this has been my life," and, like, lie about it. No, go in and say, "Hey, I've been in marketing for 15 years, but I wanna buy an accounting firm, so I just put in 12 months of work for you to take me seriously."
Yes, absolutely. Because people don't want your lark to be a bet. Like they don't want their company to be your bet on something that you just came up with, right? So that is so good. And as these multiples crank higher and interest rates stay high and things stay less affordable, at the end of the day, if you're spending your time trying to buy an accounting practice, and you're also getting these certifications and this skill set, you're going to be in a position where you can look at the smaller firms and perhaps do this bolt on opportunity. Or you can start, a very small practice yourself and then grow it over the course of 18 months to the point where maybe you're going to, be able to do expansion loans. So you're going to put
That
yourself.
would be that would be cool. Okay, so if you almost have to quit your job, you almost have to have a year runway, like, okay, so
That's
now
what
we're
I'm
not talking
guys, listeners, quit your jobs.
for I mean, look, we're
Yeah.
not talking to everybody here, it's a certain subsect of the market, but be realistic about the budget to buy. If you have access to $300,000, don't think you're going to go buy a $3 million firm. Plan to take 12 months to get the credential in bookkeeping, become an EA. There's nothing stopping you from taking a client. So learn a little bit about how to sell it. Or there's so many avenues. Like you could go work a season at H&R Block and get trained on how to do taxes. And it's seasonal work. Like they know you're not going to stay. So, you just go and do it. And
I once had a call with, I try to follow up on clients post closing. The takeaway of this person's experience was they bought a client list instead of a business. So they bought a client list, and they did not have an existing business. And so the transition post closing of them setting up a new company that with new systems and new software subscriptions and new email addresses and new websites and new phone and new everything, and having existing clients peppering them with questions and needing returns done was just an absolute mess. Like the transition was really, 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 really hard to effectuate for that reason. So that's another reason that if you're really serious about this next step, having even a small practice that is set up in a way that you like will make it so much easier to incorporate a new book of business.
the moral of the story is it's not going to be a short thing. Like you can't just decide you want to buy an accounting firm and then just do it in 3 months. Like if you either have to bring an extra million to the table, like you said before, or put in the work to help a seller realize that you're serious. And you can't even get around this with partnering with someone. And this is like it's going to
Yeah.
cost me some business, but I have a few people who I'm partnering with so that I can be that face. So it's like, okay, somebody with equity is going to be licensed and experienced and able to do some of the work. And I'm gonna be honest, it doesn't make it that much easier. I'm gonna pat myself on the back, but I can sell. So like that's what the only reason we're successful in it is because I can sell. It's not because I have experience or the license. Like I'm just good on a call and I can pitch somebody a vision, and that's what's working. The fact that I have experience, the fact that I have an EA, they don't care. Like they know that I'm going to be a minority owner. They're focused, laser focused on the person who's going to own 70, 80, 90% of the firm post acquisition. So partnering with a CPA or an EA, it helps. It's not going to be the solution.
So it opens the door. It doesn't like
Yeah, I think it opens the door, but like, yeah, unless the CPA or EA you're partnering with is like a rock star at sales, then you're still gonna have a hard time.
I always made decisions like you did, Daniel, where I was like, what closes the fewest doors? And so I think when I talk to buyers who have been through an entire season and not been able to acquire a firm, they don't have anything to show for it. So if I were in that position and I were, doing a search fund thing where I didn't have a job, I would probably be doing both. I would probably be looking for listings. I would be pursuing all that, but I would also be doing something like getting educated on this area, because the whole time, right, you're going to be around more people, the odds of finding an off listed deal or some other kind of opportunity are way higher. So might as well get spun up on it. It's not going to hurt you.
A big part of the accounting industry that a lot of people don't realize, especially non-accountants coming in, is that a lot of accountants are part of associations. If you're a CPA, you're a part of the AICPA. The AICPA has a great event. Um, But there are plenty of conferences that are not affiliated with the CPA governing body, like QuickBooks. QuickBooks Intuit has one called QB Connect. Zero has Zero Con or whatever it is. Um, there's a professional advisory accountants association, PASBA.
Not know what it stood for. I've only ever heard PASBA. But PASBA like a lit. That's where it's all at.
I heard that PASBA was just a bunch of old guys, and I never went. But apparently, at some point over the last couple years, they got cool.
I don't think you understand what role old guys play in our economy. Have you turned on the news lately? Like they're kind of where it's at. Like, You wanna be in the room with the old guys because that's, like, who's making decisions and doing
That's
stuff.
true, and they're also the ones that are likely to sell their firms.
Yeah.
So, anyway, that's my point is, my if you don't wanna go get the EA, look, the EA would be awesome to have, and if you're
Yeah,
gonna buy a tax firm, you should probably get the EA. There's plenty
yeah,
of bookkeeping firms that don't do tax, or
that's
maybe tax is like a minority part of the business. You can do the Coursera thing, you can get the bookkeeping credential, you can join PASBA. You'd think they would have what the acronym means on their website.
man. It's like Xerox
Here it
for
is. No, it's
yeah.
the Professional Association of Small Business Accountants. So Coursera, couple months, bookkeeping credential, join PASBA, Professional Association of Small Business Accountants, go to a conference, meet some people. Like, it's like the easiest way to learn, to develop the lexicon so that you can have an educated conversation with a buyer, and you can say, look, I may be a marketer, but I did these things. I can speak the language. I can help your team. I'm going to be doing the marketing. I'm not going to be preparing tax returns. I'm not doing month end close, but I know that those things exist. To put a bow on this, like, update on the accounting acquisitions industry right now. So, like, what should people expect evaluation multiple to be of gross sales?
Yeah, 1 to 1.5x,
Still
gross
still
growth.
1 to 1.5, or do you think they should expect to be at 1 and a quarter? I haven't seen one at 1 times gross sales in a while.
I have seen a lot, but they're usually the ones that are like, they're not remote. They're obviously, if you're below 2 million, for instance, yeah, they're old school. Their technology stacks are like meh, and then the owner's doing a lot of work, that kind of stuff. So I used to see some that were down in the point 0.6, point 0.7, and I haven't seen any of those this year. So I would expect that, but I mostly would expect that you have to be really competitive. I've had a lot of LOIs that are based on kind of prior years ethos of like, I'm going to offer just 100% seller financed. So no bank will be involved. There'll be basically no cash at closing. It's just a note and I pay it to the seller over the course of time. And that's going to be subject to, retention or basically an earnout. And those don't even get a response right now. Even if it's a really, traditionally poor firm, they're just like, get out of here.
So still 1 to 1.5 times total sales, gross
Yeah,
sales.
but the way in which it's delivered is much more competitive to the seller.
Yeah, you gotta, like, thread this needle where the LOI is attractive enough that you get it signed and you get that exclusivity, and but also, like, not setting yourself up for failure and exposing yourself to a ton of risk. Yeah, so expect to pay a little bit more, 1 to 1.5 times gross sales, trending up.
Mhm.
Partner with a CPA or EA, but also be, like, getting educated yourself if you are not one.
Yeah,
Work with a legal advisor, call Sarah, like, in the LOI stage, so that you can, like, have an LOI that's attractive, but also not going to leave you out in the cold.
they'll do it. It's still just a really good asset class. Like, I've been looking at real estate, residential real estate, just, as an investment, and I'm like,
Why?
it's just I don't know, you gotta do something. I'm off social media, and then you're just like, "This doesn't make sense at all. This doesn't cash flow," versus what I look at all day. I would love that, just like the side by side of if you have $1 million to invest, like, real estate versus practice,
You could compare your was it point 0.1 times cash on cash return to, like, a 300% cash on cash return in year 1.
and you're not even gonna have to, like, show up to replace a leaking toilet, so
That's
probably.
I mean, I don't know, tax return, leaky toilet.
Yeah,
It's a
pick
toss-up.
your poison, yeah.
Thanks for listening to the Dealmakers podcast. Yeah, if you got any value from this, like, subscribe, and if you have questions about buying accounting practices or buying businesses in general, comment below, and we'll see you next time.
Big, I gotta make it just for my kids and for their kids' kids. That's wealth years and years. Promise my brother soon as he out to finish this bid.